Tesla's down 12%, trading under 200 bucks right now at 182.63. And in this video, we're going to go over this order block that's sitting here on the weekly chart, sitting between $150 to $125. If I think, and when do I think that we could retrace back into that level? We're also going to go over this bearish order block sitting up here at $250 and what I plan to do with my March calls. Now, obviously, those are evaporated. They're down like 85%. And while it sucks, we expected this. I don't ever plan to make money on any trade. I know that that sounds dumb, but I've been doing this for nearly a decade now, and I understand that you cannot control the market. So to get mad at something that I can't control is stupid. All of my signals were lining up to take a position from an actual technical level. I knew that there was risk swinging it through earnings. I appropriately positioned myself going into earnings with the appropriate amount of allocation capital, meaning I didn't overload myself with too big of a position. And I understood that there's always the chance that we're going to have bad earnings. It has basically happened for the past 4 earnings on Tesla, and we understand that. I'm not going to close out the trade right now because it is down so much. And on the rare, crazy occurrence that Tesla somehow pushes back up to 250 or even 300 by March, I want to be able to hold on to those contracts just in case. Now in this video, we're not going to go over the fundamentals of earnings. If you really want me to, I can, but since we're sitting here on the next day, and I assume that every other YouTuber has probably gone over them already, I don't think it's something that we really have to look at. What I heavily want to focus on is this institutional level sitting back down here at this support of about 150 to 125. And more importantly, I want you guys to understand why this is an important level. This is not something that's on a short-term trading chart that we're waiting for all these stars to align. This is a massive, massive time frame, which means that anything on this weekly chart is something that you should be looking at, in my opinion, even as a long-term investor, if you're somebody who's using a wheel strategy or selling cash secured puts to make some extra capital. Now back here in January, we had this big drop in 2023 where we pulled all the way back down here to about $104.91. What happens when we have these bullish order blocks is that we will get a break of structure or a lower low, which happened here. Now, basically, when we get these massive sell-offs like this, quickly followed by a buy-up that has a surge, which is most important, with no pullback down into this zone, it usually shows an inefficiency in the market. And what I mean by that is that if you are a hedge fund, and we're not talking about trying to buy $1 million worth of Tesla stock. We're talking about if you're an institutional hedge fund who believes heavily in Tesla and you want to maybe get a position of a couple $100 million to maybe $1 billion, well, you can't just hit the buy and sell button the same way that we do. You need liquidity, meaning you need other market participants to come in to meet your orders. And in order to do that, you need an area where there is a lot of volume. And so for instance, like we said, we know that there's a lot of volume between $179 and $250. So when this area broke, it got bought up quickly. And all of the big money, all of the hedge funds, everybody who wanted to get in Tesla around this level of 125 to 150 were unable to fill on all of their positions. Because you have to think about it. If you're setting limit orders for hundreds of millions of dollars, if they start triggering as the stock pulls back into your level and everybody else jumps in, you might not be able to fill with your entire position. Let's say that our hedge fund wanted to get $800 million in Tesla shares. Well, on this push up 113% within a month, I probably did not have enough time to fill with my adequate position in this level. So what that means is that the stock in most cases will tend to retrace back into usually the middle of this bullish order block or whatever block we're looking at. And the psychology and the reasoning behind it is because, like we said before, a hedge fund is not going to just, number one, be reckless, throw their money away, fill at whatever they want. They have very specific levels that they want to fill at. They have very specific parameters in order to even take a position, let alone put a significant capital on the line. So they must wait for the stock to pull back towards their area, and as it does, we will start to see those limit orders hopefully fill, and then we get those bounces back up. Now, in this case here, you can see this is a bearish version of that. So we actually came up here in January, December of this year, swept to the upside. So this is a break of structure. and then we quickly pull back without ever coming back to retrace. And now there's a chance that we will pull back up to test 243 or pull back down to test $140. In my personal opinion, I do think that the chances of Tesla pulling back down to $135 to test this bullish order block will probably happen sooner than this block that is more recent around 240. Like July of 2023, you can see that we have this resistance level that's sitting up here where we've multiple times tried to break through, but we're unable to. And then if we take a support level for that channel, you can also see that we have a nice support where we usually tend to bounce around this level. Now, as I said before, I think that there's probably a better chance that maybe going into next week, we could see a small bounce back to 190, maybe max 195. I did actually grab shares of tsla today just to swing into tomorrow because I think that we could see that push back up to 185, 195. But if we're unable to get back over $200, which I don't think we're going to be able to hold, unfortunately, I am a long-term shareholder, but I think that if we're unable to hold there, well, now you have a very significant chance and a very high chance that Tesla will just completely drain itself down to 155 and $140. Now, technically, the best time to be going long would be down here at about $140 because that is going to be the middle of this bullish order block or the mean. And so in best case scenario, we really wait for the pullback down to there. And once this ends up happening, how would we be setting our stop loss? How would we be setting our take profit? So let's go through and just take a look at our actual positioning. So if we have a planned entry of 140, let's just say it's not going to be that good. Like, let's just be real. Let's just say it's going to be like 150. We end up entering around 150 with an average. We can set our stop loss on a lower low, and then we can set our take profit back up in the middle of this bearish order block. This would give us a 62% upside for a 33% downside. Now, this is where your own personal risk really comes into play and how your personal strategy comes into play. For me, what I would like to do is be more patient with my entry and really wait for the pullback down to 140 and then still run a wider stop loss. Because in theory, most people would set it up like this and they would run it on, okay, if we're down and we break this block, then I'm gonna get out of the trade. But truth is, like, we could under here, if there's a liquidity zone laying under here, and we could see manipulation where they drive the stock through and then push it right back up. So in this case, what we're doing is just saying that let's be a little bit more patient. Let's wait for 140. Then what we can do is actually take the stop loss, and instead of saying put it 120, we can actually move it down here to a lower low at maybe 105. And this would give us a much higher chance of profit because we're going to have a wider stop loss while still giving us a 3-to-1 risk versus reward ratio. If we were to get some 1 to 2 year out calls for, at the money, like at like $140 to $150, this could potentially be a very good trade going into the rest of the year. Now, from a fundamental standpoint, I don't know how 2024 is going to be for Tesla, but if you guys want me to do a full video on that, I definitely can. I want to bring more long-term investing to this channel because it's something that I just love to do. And to be quite honest, while I love talking about Tesla, like from a standpoint, which I'm going to continue to do, it's so little relative to what I trade in a day. We trade over 30 or 40 tickers most of the time, switching between things. Tesla is usually just one of them. So I want to trade it and show it, to you on this channel if there is a setup, which there was, but I'm not going to go through forcing anything. And I really think that there's a lot more that I can share and that you guys can learn here, to only grow the channel, but to focus on just having everybody become better every single day that they come here, because long-term investing, it's not like you just pick one of them. Here's the other thing too, guys. There's a lot of different markets. Not every market's going to work for the same thing. A lot of people who have really, really good trading bots right now or really, really good scripts who are absolutely killing it while the market's doing nothing but going straight up. Well, if that doesn't work in this type of market condition, then you're kind of fucked. If this market, if it sits sideways and it consolidates and your entire strategy is based on volatility, what are you going to do, right? This is why being a renaissance man in the market is important. You have to understand how to use the tools that you're given. You have to learn how to use all of the different, like how to trade options, know the difference between spreads, know how to, when is a good time to do a credit versus a debit spread, how to do a wheel strategy, when is a good time, if you want to get into a stock, how to perform fundamental analysis. All of these things are important. And then when you're creating, which I can show you guys, very briefly here, but really what my Discord community is about, but then you start to create some very high level bots and high level mechanics, because you start to realize that, okay, let's say that technically this is a really, really good script on Tesla. So I'll just share this with you guys very briefly, but this is based off of our day trading bot within our Discord community. If you guys want to get access to it, it's like $5 a month for the Discord community, and you get access to this. So 82% profit in the past year, while Tesla's only up 63%, so we beat it, which is great. 76% win rate, 24% losses, average win 1, average loss 2.55. So in this instance here, this is great. This is a nice little trading bot that you could end up setting up that you might be interested in using. But then what you don't understand is that something like this might only work in a specific market. So then what you have to do is start to realize, how can I layer all of these other things to create a massive strategy? Like, I'm not sitting here shooting at the hip every single day. Like, I'm not an idiot. I have highly intelligent and very, very strong scripts that are looking at so many different things, looking at the overall market, looking at would I fundamentally invest in this company, which is what I would talk to you guys about first. Like, if you're trying to create any type of trading strategy or any type of trading script or any type of consistent profits and returns, in my opinion, the first thing that you should be focusing on is only doing that with stocks that you would actually own for the long term, or that you believe are going to be strong in the long term. It's crazy when I see so many people are like, oh, I blew my account up because I bought, some shit penny stock that like should have went up. And it's like, are you kidding me? Like, for instance, BBBY or something like that. Like, oh, I lost my money on GameStop or BBB or AMC. And it's like, dude, it's a shit company. Like, what do you expect? Like, if you wouldn't invest in it, don't touch it. That's why I don't touch specific tickers. It's why I won't trade a lot of the very hot, it's just something I want to invest in long term. And so when it comes to Tesla, I usually on this channel will cover it just because I'm a long-term investor. So if I'm going to sit down here every single day and look at this chart because I want to see if there's a trade, plus I'm just seeing what the stock did for the day, I might as well share it with you guys. I might as well bring some value. So I hope this video helped, guys. Please let me know if you guys have any questions or if you need anything. I'm going to post some videos on NVIDIA, SPY, Intel also had earnings tonight. I think Intel actually just shit the bed too, off of earnings. So I have to see what ended up happening there. But yeah, guys. Oh yeah, all the way down to 44. All right, guys. Let me know if you need anything. Check out our Discord community. Second link in the description if you want to get access to all 50 trading bots and all of our trades, and just want access to the Discord community where you can get access to our courses and a couple of our other bots. We have about 5 of them over there. That's $5 a month. The only reason that it's not free is that, number one, we don't want to have people who are just gonna troll and shit post and not take things seriously. There's no time for that. And also just for scamming purposes, because it's just nuts, man. Like, people are terrible. So I hope this helps, guys. Thanks for all the support. Peace.